Good day, students. Welcome to this section. Today we are going to be talking about single entry and incomplete records. Using the net worth method, single entry account is a small account that does not follow the double entry, where the income, the debit and credit sides are not being maintained. In this case, businesses that are being owned by small business owner or sole proprietor may not be able to keep the double entry due to the lack of resources and expertise in keeping the account. Today, we are going to talk about the single entry and the double entry, the single entry and incomplete records using the net worth method. Net worth method. Net worth method. When we say the net worth method, we are talking about what the business actually worth, that is in capital aspect. In net worth method, take for instance, a person who has run a business for the whole year may start with 100,000 naira, and at the end of the year, he ends up having 150,000 naira as capital. So how do we calculate the net worth? This is done by deducting the initial amount of money the person used to commence the business from the balance, the closing amount of money the person is having. Take for instance, at the beginning, the person is having a capital of 100,000, and at the end, the person is having a capital of 150,000. In this particular case, the only thing we have to do is just to ensure that we calculate the profit, and the profit can actually be actualized by deducting the amount of money used to commence the business compared to the balance that is being So in that sense, we are going to have 100,000 minus 150,000 minus 100,000, which is going to give us 50,000. This particular amount of money will be considered to be the profit generated during a particular business year. Now, what about in cases that we have drawings by venture? The person told us that during the year he withdrew money for personal use, or he withdrew goods for personal use, for consumption. For instance, a person running a bakery, and during the year he or she must have consumed a particular portion of the worth of the bread that was being prepared. So in that sense, we are going to say that this is not the profit to be realized. The profit is meant to be more than this in that sense. In that sense, we say we add the drawing. We add the drawing to the capital. We add the drawing to the capital. Then if the drawing is per measure 20,000, if the drawing is per measure 20,000, then the opening capital is going to what? We add the drawing to the I'm sorry about that. We are going to add the drawing to the closing capital, which is what? 20,000. Then the profit will be what? 70,000. This explains that if the person has not consumed 20,000 worth of bread or goods or money withdrawn from the account, the profit will have been 70,000 naira. In cases whereby the person explained to us that he or she brought in another money after the initial 100,000 naira considered to be capital, then we say the amount of money being brought into the business is nothing other than additional capital, which is going to be what? Added to the opening capital, or less from the profit. The reason for lessing it from this is that the profit will not be 70,000 again. Remember, we added 20,000 in case where they destroy to the what? To the actualized profit, which is what? 50,000. So if in peradventure the person has bought 20,000 or thereabout additional capital, let's just say 15,000 additional capital as we bought, we rather less it. Because if additional capital has been bought, it's going to what? Amount this to what? This will be opening capital, and additional capital will be added to the opening capital. that is 15,000. To make this what 115,000. So we have 115,000 as the total amount of capital incurred or put into the business, which is going to what make this to what 150 minus 115. That's going to give us 35,000 naira. Before we add the drawing that must have been consumed personally by the owner of the business, that's what 20,000. So the amount would have skyrocketed but reduced to 55,000. Note, additional capital reduce the profit. Note, drawing what inflates, increase the profit. Now let's go to the format of the statement of income or statement of profit. So statements of profit for the year ended. So the month 31st December 2004. So the first thing we are going to have is what? The closing capital. Let's not forget the currency sign. Never. The closing capital started with closing capital. Then we add drawing. Closing capital, add drawing. The total will be brought to this side. Then liabilities, that is less opening capital. Which we are going to add here and then post here. We will also add it to the additional capital that must have been brought into the business. Additional capital. Where the total works sum up here. So we are going to less the addition of the capital, closing capital drawing, which is going to give us this, from opening capital and additional capital, which is going to give us this, to get the what? The net profit or loss. To get the net profit or loss. Now let's take an instance, or let's take up an instance. If we have been provided with a particular business whose capital is 400,000, capital, opening capital to be 400,000, and during the year, the business owner withdrew for personal use 20,000, also brought into the business additional capital 15,000, and then the opening capital of the business is 250,000. We have to calculate the statement of profit. What do we do? We just have to make it statement of profit. The year and the likes. Then we start with what? Closing capital, which is going to be what? 400,000. Then withdrawal, that is drawing, add drawing. That is what? 20,000. That will give us 420,000. So we less our opening capital, which is going to be added to the additional profit. To be added to additional profit. Additional capital, sorry. And now will be what? 250,000 for opening capital. And additional capital is 15,000 based on what you have drafted out. That will give us 265,000. So what do? We just have to what? Subtract, because the instruction has been given to less. So that will be what? 0,005 is going to be 11 that's 5 again, and it's going to be what? 1. Because it's going to be 155,000 naira. That was going to be our net profit. because it is not a deficient to the business. Now let's talk about the question. Before we go to the question, there's something we have to understand. What is the question? We're not being given closing capital, opening capital, or the others. We are only being given some items that occur during the business. Let's note, we have to calculate our opening capital. In this, we call it a statement of affairs. It is not something that is so difficult, it's just a term. In statement of affairs, it is an account that allows us to determine capital. Just like the way I explained initially, that assets is equal to capital plus liabilities. So, what statement of account want to show us that it's going to give us the details of the assets and also the transaction that has to do with liabilities. What we have to do is just to take away the liabilities from the asset to determine the capital. And this is going to be of either beginning of the year or end of the year. So if it is at the beginning of the year, as at 1st of January or 1st of any month or the beginning of a particular month, it is going to be referred to as opening capital. The balance here is going to be considered to be opening capital. The only difference is that the dates will be different. That is, date of the opening capital under the statement of the affairs, in the statement of affairs will be different from that of closing capital, also in the statement of affairs. So, what is the format of the statement of affairs? Remember, it is going to be of two. You can have the opening statement of affairs and closing statement of affairs. But note, the format is still going to be the same. The only thing that will be different is the dates. Remember, if it's going to be opening statement of affairs, we are going to have it as at the beginning of the year. But then, if not, it's going to be as at the end of the year. Take for instance, statement of affairs as at 1st January 2004. This mark that what we want to determine here is nothing but the opening capital, since it is at the beginning of the year. And the format is assets. After you must have indicated your currency sign, mine is never assets. You can have the asset being arranged the way you like, but I prefer to start with fixed assets, the likes of motor vehicle, fixtures and fittings, and others. So, motor vehicle, fixtures and fittings, receivables, cash, bank, and others. And other liabilities. Remember, this asset has to be what? Indicated, because we want to add them up. We want to add them up so that the total was placed here. The liabilities, we have payable, overdraft, and so on. When we bring this here and then indicate the bracket. Indicating bracket simply means we want to subtract from this where the total was refers to as our capital. All we want to determine is nothing but capital. But then we can distinguish whether it is your opening capital, which is what you can be asked of, or closing capital, depending on the what? On the date. This is 1st of January. So if it is going to be what? End of the year, it's going to be 31st of December, which will probably be the closing capital. Now let's take up the question. Mokoje runs a grocery shop for which proper accounting records are not kept. However, you have been able to ascertain the following: 1st January 2022 and 31st December 2022, the transactions. Payable 700, 1002, receivable 300, 550, inventories 900, 2000, bank 1,570, 100 naira, 250 naira overdraft, cash 230, 6,500, Motor vehicle 7,200, 5,400. Features and fittings 4,000, 3,000. Mortgage will do 250 naira in total of cash during the year and 10 naira worth of groceries per week. 1,270 was added as capital during the year. You are required to prepare a statement of affairs as at 1st January and 31st December 2022. 2. A statement of profits for the year ended 31st December 2022. Now, let's note, based on the question we've been asked, the first thing we have to do is that we are going to prepare our statement of affairs. Remember, it was being stated that the statement of affairs is to determine our opening and closing capital, which we are going to use is in the statement of income or statement of profits. So, having given a question that we have to prepare it for 1st of December, 1st of January 2022, and 31st December 2022, we can still maintain this. So, we start from assets. Our assets is what? Our asset is 7,200. Our 7 assets, motor vehicle, starting with motor vehicles, 7,200. Fixtures and fittings, which is what? 4,000 naira. Inventories. Our inventories is also referred to as stock, 900. Receivables, 300. Cash, 230 naira. Bank is 1,570. Addition of everything is going to give us 14,200. Then we go to the liability as explained that to determine our capital, we have to less liability from assets. So our liabilities, according to the question we give you, the only thing we have as liability there is payable. Where the payable is our payable is 700. So payable 700. We are going to this side 700. Since we have to lessen it, we are going to bracket it. Now what? 13,500 capital. Remember, what we want to determine is nothing but capital. We are going to distinguish whether it is opening capital or closing capital, depending on the month we are starting. That will be 1st 2022. That's going to be our opening capital. Now let's go to the other statement of affairs, which is that of the end of the year. Then we are still going to have the same format: statement of affairs. As at 31st December 2022. Indicating the naira sign or currency sign depending on the location you find yourself. So we have our assets starting with motor vehicle. So according to the 31st December transaction, our motor vehicle is 5,400. Our pictures and fittings is 3,000. Inventories 2,000. Receivables 550 naira. Cash 6,500. And the total is going to be what? 17,450. So 17,450. Then we have our liabilities. We have payable. According to the question I was being provided, 1,200. Then the other thing we have is overdraft. Remember, in the question, we are being given overdraft just in front of bank transaction. We are not being told it is overdraft, it was only being indicated to what? OD. That OD simply means overdraft, that is, we will be able to withdraw more than what we have in our account. So it's still what? A liability on us, which is 250 according to the question given, and in addition of this will give us 1,450 to be subtracted from the what? Assets. It's going to be what? 16,000. Remember, this is also going to be a capital. So we are going to differentiate, like I said, whether it is opening or closing capital based on the date. This is 31st of December, this is 1st of January. 1st of January indicates opening capital. Definitely, 31st of December will indicate closing capital. So then we go to the what? Statement of profit. This is number one question we are going to do to prepare the statement of account for the 1st of January and the 31st of December. Who is the winner of the account? More cogent. So we go to the statement of account. Statement of account, more cogent. Statement of profits. Sorry. For the year ended 31st December 2022. Now, having known this, we have to go back to the format that was being provided earlier for the statement of profit, which is what? Closing capital. Afterwards, I've indicated the naira sign or the currency sign we have, depending on the definition we find ourselves. Our closing capital, according to the question we have here, is 16,000. According to the workings we've done, rather, is 16,000. 16,000 naira. Then we have to add drawings. Now, the drawing is kind of a technical. According to the question, it was said that Mokoye withdrew 250 naira cash. That is cash drawing. So cash drawing of 250. That's not of 250 naira in total of cash during the year, and 10 naira worth of grosses per week. That is 10 naira worth of grosses per week. Simply explain that for the whole year, Mokoye consume grosses 10 naira on a weekly basis, and in a year we have 52 weeks. That's going to be what? For grosses, it's going to be 52 multiplied by 10 naira. That will be 520 naira. In addition to add everything up, it's going to give us this 770. That is 16,770 naira. Then we go to less opening capital. Our opening capital, according to the workings we've done, is 30,500. Remember, it has to be added to the additional capital provided by us. Additional capital. Additional capital, according to the question, is 1,270. 1,270. Adding this up is going to give us 14,770. 14,770. And to less 14,770 from 16,770 is going to give us 2,000 naira. And our 2,000 naira is going to be considered to be our net profit for the year. Now let's note, this is how we are expressing of. This is our net worth method. We have the conversion method, which is going to be discussed not now but later because of the time. So you can check the next video to get to know the conversion method being discussed. So also note our single entry and incomplete record is an account being kept by a small enterprise or small business owner who possesses less resources or expertise in working on the standard accounting processes, like your double entry. So in that sense, they will end up recording goods, but amount of money spent without having been kept on in double entry system, just to record what they have bought or what they have sold without keeping a proper account or accounting record. So if you have any question, you can drop it in the comment section. Till we meet again, see you.